Hey guys, Adam here at DirectionTrader.com. Let's do a daily recap for the 9th of April. And I'm just going to go through the three markets I traded today. I took some snapshots of the images that, the positions I took. And at the end of this, on the ES is going to be the last market I go over. I'll explain how the nicey tick actually saved us from getting into a losing position. So, starting out pretty simple here on the 6E, the euro was the first thing we traded right after the market opened. We had a pullback to a well-established area, was previous support and longer term over here. They took this shot a little bit later, guys. We had some longer term support as well. What happened was we bought it on a pullback and got absolutely no support. So I ended up getting a full stop out on that one. And then later on, I decided to take it again, but at a different level. We still had an uptrend here on our shorter time frame, our trending chart. We had an uptrend still. We'd come back to our previous resistance, becomes new support, and we're looking to trade back to the long side because we had a lot of open momentum up here to the upside. It just didn't happen, guys. It happened all right here. This is where we're looking. Sorry, it's a different time frame, but we're looking right here on this pullback, and we had a lot of previous resistance, came new support, and we were looking for this little push up here, which ended up coming later, but it didn't come whenever we were looking for it. So obviously we had two stop outs here, bright and early in the morning, and we lost $162.50 before we even got going today. So it was a tough start, and if you're familiar with my strategy in my room, if I have two losing trades in a row on a certain instrument, like in this case was the 6E, any instrument, I'll stop trading it for the day because my mindset says that either I'm thinking wrong, like I'm either over trading or getting too wrapped up in this position and getting into tunnel vision, looking right here rather than looking at the whole scheme of things, or the market's not reacting like I want it to. So either way, I want out of it, and I'll move on, and I'll try to find a different instrument to trade. So we had a rough start today. We started out 0 for 2 in the hole. Luckily, we were able to come back later in the day trading the Russell and the ES, which I'm going to show you here in a second, and we're able to make some profits. But next, we'll go to the Russell. On the Russell here, what happened was we were in an uptrend, and rather than taking here's a low, here's a high, taking this Fibonacci pullback, which was going to take quite a bit of risk, guys. If we were to enter at our level that we were looking at, we were going to take anywhere from 18 to 20 plus ticks of risk, and I don't like to risk more than 10 to 12 ticks on a Russell. So that was a little bit too much risk for me to take on. So what I do is I do the exact same trade just on a micro level. I do it quite often in the room. So basically, since we're in an uptrend, we got the pullback. So what I'm going to do is that pullback happened right here. I'm just going to wait for the micro pullback in the same direction and trade it. So basically, I was disciplined to wait for the micro to set up. It doesn't always set up, but when it does, it just you have less risk on the table because it's a smaller move. And I want to trade it back in the direction of the longer time frame. So that's exactly what happened here, guys. We entered here with a single contract, and we were able to trail it up and make 15 ticks of profit. Then it pulled back, and we were looking to do it one more time. We had well-established over here. This was very, very well-established. Previous resistance became new support. Remember, we're trading right in this level. This level falls right in this level, right here. And what we're looking to do is continue this trade to the upside because we have prior resistance up here, and in the past over here to the left, we had some previous resistance up there. So we were looking to trade back up towards these highs. Never happened for us. On this one, we got a little tick in our direction, so we were able to move our stop up to a -5 and end up getting stopped out for that. So we made plus 15, -5 for a positive 10, $100 in the Russell market. It's not too bad. And then we traded the ES. One single position in the ES here. ES after the open started to sell off, guys. And after it decided to sell below our trigger line, everything started pointing down. It was starting to get very bearish. Things were looking good for us. We had the tick down here making lower lows and lower highs. everything was looking good to the downside. What I did was I drew this channel. I said next test of this channel, as long as we have a low tick testing the 0 level, we were going to short, and that's what we did. We got +4, +6 for 10 ticks of profit on the ES, and that was our day. We called it a day right then, and we waited, and this thing decided to get choppy on us the rest of the day. The entire day until we stopped the trading room at 9 o'clock, we were in a 4-point range. That's extremely tight in the ES, so I will constantly caution and kind of just sit on my hands and not overtrade and just wait, you know, guys. So we were able to turn a profit after going 0-2 to start the day, and then you know, end up turning out to be a pretty good day. Right down here, we had a couple guys in the room talking about shorting again. So basically, we had a channel here, guys, and this thing was trading very, very nicely. But what was also going on is the tick down here was also trading nicely to the downside. What had happened, though, right here, whenever I was asked to go short again, you know, I got a high, got a low, got a Fibonacci, you got major resistance here, guys. Everything trending down, everything going good. But one little thing happened over here. We had a spike up in the tick. So we had a higher high in the tick, equal lows, so we were losing momentum to the downside. We were actually lower in price, guys. So we had lower low in price, but a higher high on the tick. That's red flag number 1. Red flag number 2 came right here. You had a high in momentum, high in price, a lower low or lower high in price, but a higher high in momentum. So you had divergence on the tick, and you had divergence on the momentum. So I said, X-nay, abort mission, get out of this, because I actually thought we were going to go into chop mode, which we kind of did, but ended up reversing immediately. So that would have been a stop out. So we aborted that mission. A nice little handy way of how we can use the tick and momentum to save us, especially the tick, guys. Momentum tends to, you know, it'll show you false divergence quite often. But if you learn to use this tick, guys, use it as the 0 level. As anything above it, if you're trading above it, you're looking for longs. Anything below it, you know, you're looking for shorts. But especially if you're starting to use that 0 level as its highs, like we were all the way down, and then you had a spike above, extreme red flag for shorts. Abort mission and try to sit on your hands for that, and go ahead and miss that next position and wait. So that's a little daily recap, a little rundown of how to eliminate some losses using the NICE tip. But if you got any questions, come by directiontrader.com and come give the live trading room a trial, guys. So that's it for today. You guys have a good evening.